Guys, welcome to Better Bachelor. My name is Joker with a face, radio, and a voice for print. I am not a market expert by any means, but I've told you guys now for a couple of years that things haven't really made sense with why so many businesses were doing well and how there's record profits across the market, even though the bug had gone through and closed a lot of small businesses and companies, their stocks just didn't fall off. And I remember before my father passed, we were talking about the market, and I said, well, this doesn't make any sense. I'm pulling my money out of it. And I did. Right now it's sitting in my bank waiting to buy land and pay for a home, and I'm going to be spending a lot of it to become completely independent, off-grid, so I can kind of get out of the system. And then if I can continue to make money, great. Then I'll resave. But I don't need to save much because I own everything. But what happens if the bank that you belong to all of a sudden doesn't have your money anymore? This is something that I actually have thought about, and I've diversified many of my funds across multiple banks because you're only FDIC insured or federally insured per bank up to about $250,000. Well, I want to show you how quickly things can change and why I say you need to be prepared for the either a collapse or things falling apart, because this shows you how quickly a bank can be going from great to done in a matter of a couple of days. Guys, before I get too deep into things, do remember that there are stories I am no longer doing on YouTube anymore because I'm tired of being demonetized. So I have a new video that you see in front of you here that I will be doing only on Rumble and only on betterbachelor.locals.com. So if you're still on YouTube, there's going to be the fun, spicy content that you're not going to be able to see because you're not on those other websites. So make sure to go over there and check them out today. I have this from MSN Money. This is a chart of SVB, which is Silicon Valley Bank. This is the bank that does all the venture capitalists, all the tech startups, everybody that was taking the free money over the last few years because interest rates were so low. And I told you guys about, if you saw that video, I told you about a zombie company. That's a company that is not profitable, that will not survive. The only way it's able to continue to do so is they're borrowing money and they're buying back their own stock, increasing the stock value and making it look like a good investment, and then hopefully they get some outside funding from investors. Well, this is the main bank that does a lot of Silicon Valley, and this is SVB Financial Group. And you'll notice here that over the last year, their high was $592 just about. Their high was at about $600, and this is as of April of last year. And in the course of 1 year, you can see they dropped all the way down to 200 and some odd bucks, and then just in the last 5 days, they've dropped down to $39, from $600 per share to $39 per share, and falling. The stock has been halted, and now it looks like the government's going to come in and shut them down. I want to talk about this because, again, it tells you how quickly things can, and it's listed as a hold. It crashed so quickly they didn't even have time to update their analysis of it. And it's done. And this is a bank that's been around for 24 years. Turmoil at Silicon Valley Bank triggers market panic. Four biggest U.S. banks lose a staggering $52 billion in valuation as the Dow drops 540 points. This is in basically 1 day. 1 or 2 days, they lost $52 billion. S&P 500 Bank Index fell more than 6% on Thursday, and sharpest drop in 2 years. Now, if you remember the last time this kind of thing happened, I think it was Goldman Sachs that just got yeeted in the matter of a couple of days, very similar to this. And what happened to that? The bank started collapsing, and then we had a bank bailout. And the government said, oh, we've put in all these policies to make sure it doesn't happen again. Yet, here we are. And we've been doing bad lending just like before. And the interest rates are going to have to continue to go up because inflation continues to go up, which means unemployment goes up, which means more businesses fail, which means people get less money, which means they rely on their debt instead of their savings account, which means they have less money and buy less. And we do not produce anything here in the United States anymore, except feminists and weirdos. Other than that, we don't make anything. We are a shopping culture. The guy that buys something from, I don't know, Walmart, he keeps Walmart going. The employees at Walmart buy stuff from Starbucks and McDonald's. The employees there buy things from other places, and around it goes. But what happens when everybody stops buying? Because they don't have any money anymore. The whole thing comes apart. They say sharp losses in banking stocks led Wall Street's main indexes lower on Thursday as turmoil at Silicon Valley's bank parent company triggered investors' fear about the stability of the financial sector. The S&P 500 bank index tumbled more than 6% in its biggest one-day drop in over 2 years after SVB Financial Group announced a massive equity raise to cover a $1.8 billion loss on the sale of investments. The four largest U.S. banks, J.P. Morgan, Chase, Bank of America, Wells Fargo, and Citigroup, saw their share prices plunge between 4% and 6%, wiping $52 billion from their collective market capitalizations for the day. Stocks fell broadly on Wall Street, with the Dow Jones Industrial Average dropping 543 points, or 1.66%. S&P lost 1.85%, and the NASDAQ composite was down 2%. Now, why is this stuff important as a bachelor? Even if you're not in the stock market, even if you say, well, I don't have enough money, I'm not invested in things. These are all warning signs that the pain is coming, that the good times are coming to a stop. Things are going to get ugly. Things are going to get painful. Markets collapse, and if the government needs to bail them out, that is our taxpayer dollars bailing out these banks because they were doing bad lending policy. They were giving money away for free. They weren't making wise money decisions, and we at least here in America, and I'm sure it's going to be the same overseas, we're going to have to bail them out, because if you don't, you have an entire collapse of the U.S. economy. And it may not happen with this particular bank, but what happens when it's one of the other four largest banks? What happens if J.P. Morgan Chase happens? What happens if it's Bank of America? Now, if you have a mortgage at those companies, you're probably thrilled. But if you're like me, where you've just got cash waiting around to do something with, like in my case, paying for a home, I'm having a metal building erected and electricity and solar put in, and digging wells and digging septic. And of course, I've got the men's retreat that I want to do, and same thing. All the cash from that is sitting in a bank, waiting to do something with it. What happens if it all falls apart while I'm waiting? I'm broke. I'm starting over again. Well, what happens to people's 401ks? What happens to people's savings? What happens to everything? It's gone. It's just gone, just like that. They say the shares of SVB Financial, which owns Silicon Valley Bank, plunged more than 60% after the company announced the sale of new shares to cover losses on the sale of government bonds. Here you can see Citigroup down 4%, Bank of America down 6%. It's battling cash burn due to declining deposits from tech startups struggling with a venture capital funding drought. And this is what I've been talking about in the other videos I've done on finances. These companies cannot borrow money anymore because the interest rates are too high. The only way they've survived is by borrowing money. So now that they can't borrow money anymore, they don't have any money to deposit. They don't have any money to bank with. And so the bank is like, well, we don't have any new cash coming in. No one wants to borrow money from us. We're struggling, and that's it. The company's assets and deposits had nearly doubled in 2021, and the bank poured much of those funds into U.S. treasuries and other government bonds. But as rising interest rates battered the tech startups that the bank primarily serves, declining deposits forced SVB to sell off bond holdings, which in the meantime had plunged in market value due to the rising rate environment. The turmoil at SVP sparked a sell-off in peers with similar exposure, with San Francisco headquartered First Republic slumping 16% after hitting its lowest level since October 2020. Declines at the massive four banks I already read. They said Silicon Valley raise got everybody nervous about people's venture capitals and what deposits are doing. A lot of institutional investors don't feel great about owning certain banks right now, said R.J. Grant, head of trading at Keefe, Bruyette, and Woods in New York. It just gets people freaked out because Silicon Valley historically has been a very strong, well-run bank. If they're having issues right now, people are wondering what other banks that are lesser quality and that don't have the reputation that Silicon Valley Bank has. They go on a little bit deeper into it, but yeah, on Thursday they fell 60%, and then on Friday it fell 60%. And they said, okay, we've got to stop this. They're just hemorrhaging. And this was something I found online. 44% of U.S. venture-backed technology and healthcare IPOs year-to-date bank with SVB. So a lot of these new companies, a lot of these companies that are doing venture-backed technology are done. You know, if you ever wonder why the Huffington Post and Huffington Post and Vox and some of these garbage websites keep going, it was because of venture capitalism. That people took bets basically on these websites or various products or tech startups or whatever, and the time of betting is done, and everybody that bet is losing. The good times are gone, the free money's gone. This means a lot of these startups are going to crash, means a lot of people are going to become unemployed. Unemployment probably will skyrocket. You know, to get the interest rates back down around 2% where the Fed says they want it, you're looking at a unemployment rate of 10 to 15%. We may very well go back to like things were in the 70s. And I've said this as much in other videos. And it's not that I'm some like financial guru. All you have to do is know the past, look what the markets are doing, look how they're supporting themselves, and you realize this is unsustainable. It's so bad. Here's a line of people. I'm not going to play the video. It's very short. It's only 10 seconds. But you can see here that in this line, there's already a line of people, maybe, 50, 75 people standing in front of SVB Bank. They're going in and they're going to say, I want a check for my deposit. Cut me a check for what I have with your bank. I'm going to put it elsewhere. That's the end of SVB. You know, they'll end up giving out every penny that's in all their accounts, and people will not trust them again, and that's it. It's over. Now, will the other banks do well once these people put all their deposits in other banks? Let's hope so. But this is what happens with bad lending policy. They say SVB shut down by California regulator after bank stock crash amid turmoil. And it's the same kind of thing. They just talk about they had to shut everything down. What do you think is going to happen when this hits more and more banks, if it does? This is where we are, you know. And I'm like you guys, where I many times will laugh and say, "Let's watch it all burn down." But the truth of it is that a lot of us may lose money, unemployment, things may get pretty rough before it gets better. And while we can watch society burn down, a lot of our wallets may burn down with it. So that's something to be aware of. Don't forget, I'm going to continue on with one more story over at betterbachelor.locals.com. So if you are over here on YouTube, make sure to join me over there, and we'll see you in the next one.